There's talk of there being another quote-unquote Black Monday, and that's absolutely possible, but let's get into what the charts are actually telling us and skip the FUD. I have so much to cover, I'm actually splitting this up into 2 videos, and you definitely don't want to miss them. Nothing I share is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. What are rising and falling wedge patterns? At their core, they're consolidation patterns, and you're pulling in more of one side than the other. In other words, with falling wedge patterns like what we were forming here, you end up with more shorts than longs, and once the longs start forcing the market back up, it traps those shorts and leads to a short squeeze in short order. There was this pattern right here in purple that I said could have been forming a bear flag, and if we take a measured move from the first leg down from this pattern and we drag it over to the breakdown from the bear flag, we can see that SPY was actually targeting around 520 to 522, and we have well overshot that. I believe that the market was actually planning to break out of this bullish falling wedge, likely believing that Trump would cancel his tariffs or they at least wouldn't be as bad. But as we can see, on Wednesday, April 2nd, aka Liberation Day, the market started tanking the second he held up his little sign showing just how much the tariffs were actually going to be. This is why you have to be nimble as a trader and always be open to what the market brings, not what you think or hoped would happen. The market sold off on Wednesday, tested the roughly 540 level on Thursday, and finally broke below, which put the market into very negative gamma territory because there are a ton of 5,400 puts on SPX. Then on Friday, when Xi Jinping announced 34% reciprocal tariffs on the US, the market had a real washout event. If I zoom out just a little bit, notice how the market hit the extended upper resistance line of this previous bearish channel and bounced off of it. I'm telling you, extended lines often hold significance. So if this big falling wedge plays out to the downside instead of going to the upside, it indicates that SPY could still head to about 489. I've shared this before, but there is a major bullish channel here in green that goes all the way back to October of 2008. And its lower support line has only been broken twice, at the market bottom in 2009 and again in March 2020 during the peak pandemic fear. Look how close the market would be to that support line if we got that low. That would be around 480 if we hit it. Unless the current event is genuinely as bad or worse than the '08 Great Financial Crisis or quote-unquote the vid, that support should hold and we should see a sizable reversal from there. And if we keep heading towards that support, it could be the drop that pushes the VIX well over 60, but we'll have to see. If anyone's scratching their heads how we could go from all-time highs to all-out market panic in just a couple of months, I've shared this before. This dark red resistance line goes all the way back to 1929 on SPX, and it's marked the beginning of major bear markets every single time that it's been touched. You can see that it kicked off the selling in 2000, then the market double topped in '07, leading to the '08 financial crisis. And as you can see, we have now touched that line again. But as I've shared multiple times before, even though that indicates that SPX could ultimately be headed down to the lower support line in light blue between about 3,900 to 4,000, there are always counter trend moves regardless of the trend. As we can see from January of 2022 all the way through October of 2022, there were numerous green months that occurred in between. So why am I saying all this? If you're really afraid that the market will never find a bottom, you could always choose to use monthly bounces to de-risk. And I want you to notice also how the monthly RSI on SPX is at 34, which is very close to being oversold. And see how every time before that we got this low, the market always pushed forward and upwards in the months ahead. So it definitely looks like this RSI ascending triangle pattern that I've shared multiple times is about fully played out. And the weekly RSI is deeply oversold at 12.79. The last two times it got that low was in the '08 Great Financial Crisis and during peak fear during the pandemic. And notice how the light green support line held up both times. So what does all this mean? I believe we are due for a sizable dead cat bounce at the least, and possibly even a reversal soon, especially if we touch the lower support line of the multi-year bullish channel. If things are different this time and we're staring down a potential collapse of financial systems, economies, etc., and we break this support line, then the main support line that has never been broken would be all the way down in the 380s. Somewhat confluent with what I pointed out on the equivalent level on SPX. So if we throw up a Fibonacci retracement from the October 2022 lows, we can see that the wedge target of about 488 would get us close to the 50% retracement, and 480 is the 50% retracement. Out on the monthly, this would also line up perfectly with this major level here from January of 2022. And it would put it just below the monthly baseline of Ichimoku, which often acts as a magnet. But that would also place us below the resistance of the Ichimoku cloud on the weekly time frame. And this would also have us hitting this main support line of that bullish channel that I mentioned, and the key level of 480. If we get down here, I absolutely would be looking for bullish confirmation to buy some longer dated calls if support holds, but that's not a recommendation. So what do we have going on QQQ? I shared before that the pattern target for this massive rising wedge in white was about 430, which we've obviously overshot already. Similar to what we did on SPY, if we take a measured move of the initial breakdown and we drag it to the breakdown of this bear flag here in purple, it indicates that QQQ should head down to about 419, and we're already very close to that at 422. If the wedge pattern is playing out to the downside though, just like I mentioned with SPY, that measured move would be targeting roughly about 388, which would be very, very close to the 200 weekly simple moving average here in purple. The lower support line of this main bullish channel that has never been broken since March of 2009, which you can see how it begins right here. And this would also line up perfectly with the 50-month simple moving average and would be into monthly Ichimoku cloud support here. Again, if we get this low and support holds, I would absolutely be looking to pick up longer dated calls. A few trolls have commented recently that I have absolutely no idea what I'm doing and my charts are too cluttered. And I've explained my charting system in multiple videos. I was saying that the VIX could go to 60 plus back when it was around 14 to 15 based on a series of different nested patterns. And you can check my videos. I've been calling for this massive market sell-off back before and while we were still making new all-time highs. And in case anyone doubts that I put my money where my mouth is, my swing trading account is up over 80% on the year. I've literally outperformed S&P 500's average yearly return by 8 times, and we're only in April. And the earlier period in the year where you see where it dipped is where I over-leveraged on strangle trades on Tesla, Amazon, and Google. And the irony is, if I just bought a little bit more duration for the first two or micromanaged the trades, I would have been right on all three. And that's just one of my accounts. If the VIX calls that I'm still holding go deep in the money, I'll be even more positive in my other account. I bought my QQQ 465 put on February 5th and held through 15 points of drawdown because I had conviction in the technicals. And now after selling when QQQ hit basically about 435, because we had already overshot my initial target and well into weekly support, I caught roughly 90 points, 30 of which were in the money. If the things that I share have helped you, can you please do me a big favor and leave a comment down below telling me how it's helped? I would appreciate it so much. And if you know anyone who trades or is concerned about what's happening in the markets and their retirement portfolios and might enjoy my videos, please share your favorite video of mine with them. I want to just quickly revisit NVIDIA. Many were saying there was absolutely no way that it could ever see 100 again, which would have been 1000 pre-split, and yet the technicals said otherwise. I was sharing this massive rising wedge pattern months before it actually played out, warning of what could happen. What's happening in the markets right now is actually years and years in the making, and I believe Trump's tariffs were just the needle that finally popped the bubble, which was based on cheap money, stimulus, and hiding price discovery in certain sectors. And on top of all that, the US has to refinance trillions of dollars soon, and if it had to refinance at rates before the market started dropping, it would not be pretty. All that said, I keep pointing out this RSI falling wedge on NVIDIA. If this right here ends up just being a false break to the downside, we could still see NVIDIA try to push back up. If not, it did close below the lower support line, and NVIDIA could be headed even lower. Likely to retest this very key $75 level, and NVIDIA did close below this key level of about 96, which does open the door for further downside. I said in my last video that it was very hard for me to be bullish on IWM small caps, so long as we're below this previous very strong bullish channel in orange. Similar to SPY, the weekly RSI is all the way down to 12.7, which is deeply oversold. If we take a measured move from where IWM broke this channel and we drag it over to the breakdown from this bear flag, we can see that IWM is targeting about 178, which it's already hit. If IWM continues to drop, it's already very close to two extremely key levels. The first would be about 170 even, and the next is around 162. The market tried to break above 170 back in 2018, and then again in 2020, and it failed both times. It wasn't until near the end of 2020, when the whole market was pumping, that it could finally break that level. Then we could see throughout 2022 and 2023, 162 could not be broken below. And I'm not saying that these levels can't be broken, but it would take absolute mass panic for that to occur. If those levels get broken, IWM is pretty illiquid down to about 145, and then the next major support around 129. If we find a bottom, I anticipate that IWM will retest this previous level of about 192, and then that key psychological 200 even level. And I'm still watching the whole market for signs of a bullish bottom in the form of divergence, and hopefully a bullish pattern like a falling wedge. As I've shared multiple times before, if this multi-month rising wedge pattern on Bitcoin plays out, it's targeting roughly 60,000. And I would expect there to at least be a bounce when we get to the 68 to 70,000 level. Notice how on the 4-hour time frame, price respected this previous resistance line of the symmetrical triangle pattern multiple times here, and most recently seems to have used it as support. Bitcoin has been showing surprising strength relative to the rest of the market, which seems kind of peculiar. When we zoom out on the daily, we can see that by hitting this roughly 76,500 mark, Bitcoin actually hit the halfway point of the rising wedge target, and it's now consolidating. I'm not ruling out the possibility that it gets a counter trend rally to retest about 88,000 and possibly even this 95,000 level. But one of my rules is that if there is a higher time frame pattern whose target has still not been met yet, any counter trend moves are expected to be short-lived. So ultimately, I do believe that Bitcoin is headed to that roughly 60,000 level, which would actually push it below the ascending channel support as well, whose lower support line would be around that 68,000 level. And where Bitcoin goes after that, well, we'll have to see what the structures form then. You are not going to want to miss the second half of this analysis where I go over other multiple tickers, including SOXL and SMH, precious metals, oil futures, and there's something scary on that chart, as well as what market internals and Dixie are telling us about where the markets could be headed next. Best of luck, cool cats. God bless, and I'll see you in the next one.